And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this mediocre Tuesday afternoon, I hope you all had a great start into the new trading week. As always, before we jump into my portfolio and the markets, let's get the usual disclaimer out of the way. First, everything that I share in this live stream/video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so in the past, is go and check out the Elliott Wave Principle. You can read this wonderful book for free when you use the link that's in the description down below, and you can use the same link to get yourself a physical copy. Now, with that said, let's jump into my portfolio. And as we can see, we have a slightly break-even start into the day with a slight green touch. Our portfolio is unchanged. We have our 600 GameStop shares as our by far biggest position against which we are writing covered calls. We just recently rolled our covered calls out to April 17th at the $35 strike price from originally March 28th and the $37 strike price. And now it's about, or now it's not about, but now we just have to wait and see if or when we can roll those calls further to pocket more additional premium. We have a bunch of other positions that are all paid for with the premium that we received from writing covered calls in GameStop. And as we can see, many of those smaller positions are not going the way we, or I hoped or thought they would, although in comparison, they're not really that relevant compared to to our GameStop exposure. Markets are going to open in roughly 3 minutes. Then we can check how the option premiums changed and if there is a point in already considering rolling our existing calls further. But yeah, for now, we can jump into the chart. We can see that GameStop, as expected, reached the 78.6 retracement and slightly went through. Question is, where do we actually now finish our corrective wave? As I've mentioned earlier, or a couple days ago, the profit target or the target area for this potential wave C, so for this free wave corrective move, would be somewhere here. However, we can also go slightly lower. We are safe until 2030. If we would break the low at $20.30, then we would have to look where exactly we made a mistake in our analysis. Overall, so far, I still believe the pattern holds up, considering that we have a very, very nice 5-wave impulse, 1, 2, 3, 4, 5 here, that basically makes up 1, 2, or the third wave of the bigger impulse, 1, 2, 3, or not impulse in that case, but diagonal, and where we're right now in wave 4. Now, does it make sense to apply Kennedy channeling technique here? We already actually have it, so we have our so-called we don't have the base channel on the chart anymore. We have no acceleration channel on the chart. That's actually the destination channel for, wait, no, where the 0? Okay, that one we have to adjust, of course. Yeah, so that would actually be the destination channel for the bigger fifth wave, assuming that wave 4 ends here. There's still a little bit wiggle room down, so we could retrace a little further. Although it would be also the perfect area to go up from here. I believe right now, again, it's just my opinion. Don't bet your house on it just because I say so. But I believe right now the risk-reward ratio in GameStop is excellent again. Because if you were to enter long right now, you can have your stop loss at 2030, which means around 10% risk. Whereas on the upside, you have potentially 50% or more, so giving us a 1-to-5 or better risk-reward ratio for trades right now. Definitely a better deal than entering somewhere here or here. However, obviously, it always sucks to watch or to look at pending losses. However, I'm fairly, not happy, but I'm okay with waiting this one out, so to simply see how it plays out and using the time to potentially write new covered calls. Now, market should open in 10 seconds. So, so we are going to check our current calls, which are, as said, the April 17th, that we need those. And then we have April 17th, $35 calls. So if we were to close them out today, we would have to buy those back. And in return, for example, go a week further, April 25, and sell those in exchange. Now markets are open. We should get some volume. We can see that right now it would be a break-even deal, which would make no sense whatsoever, because at the end of the day, then we just basically would give away 1 week for free. I feel like I would do that if we could get $100 per option, so for $600 in total. Obviously, we can see that right now the price is far away from that, but we can submit our order, and we can also check April 17th, 35 has currently, as we can see, around $65 mid price, and April 25th has actually a higher ask, but a much lower bid. So people are currently not bidding that much. So we actually are going to submit. We're going to submit it like this. So, or are we going to leave it? Yeah, it's tricky, you know, because if I submit it like this and the premium changed drastically, then obviously we potentially miss out. There's obviously a chance it doesn't trigger at all. Yeah, but I guess we'll just wait a little bit and see how the premiums develop. Yeah. So we're in no hurry here, and every time we can roll out. So we want to roll out when we have basically anywhere between 45 or between 38 and 20 days left till expiration, which means we still have around 2 weeks before we would, in quotes, need to or really would want to roll the calls out again. A lot can happen till then, but we obviously have to consider if we see a turnaround from here, not only will we get more premium for later call options, but also the premium to buy back our existing call options will increase. Although it can get us into situations where we actually can, where it might become more profitable to just wait for them to expire worthless. Oh, I know I've said it the last time that we actually are going to wait, and maybe this time we will. Because if we wait for them to expire worthless, we obviously get the opportunity to just write weekly call options. So basically, think short term. Of course, that means that sometimes we only get to pocket $50 or $60 in a week, but it also means that on other times, depending on how the price moves, how the implied volatility is, and so on, we get much more. Plus, it gives us the possibility to, if there is a sudden move in price, to actually roll our options further out and higher and still do that for a credit. Whereas if we still have quite some time for expiration or to expiration, it becomes harder to roll them further out for credit without adding a lot of extra time to the expiration. Anyway, so much about GameStop. It's basically moving the way we not necessarily wanted to, but the way we expected based on the pattern. The moment we broke the low that we had here, it became clear that this is not the entire correction, but we have basically wave A, wave B, and potentially wave C. The target areas we see here, there's another bigger target area, the 160, I don't know, what is it, 161.8 expansion, but, or 165, I don't recall 100%, but doesn't matter. But anyway, what's relevant for us here, since we already did the 78.6 retracement, is basically on one hand, not this line here. Let's actually, no, base channel would go higher, so we're already below the base channel, so it's not the 1, 2. Could that? No, even then we would be already, yeah. So yeah, what's relevant for us is just the 20.30 mark right now. So as long as we stay above that, I believe that our pattern is valid. And if we were to break that, then we would have to do some serious soul searching in order to figure out where we got it wrong. However, I'm still long-term bullish on GameStop either way, so which makes it nice. I guess for some, so I was covered here, yeah, by the overlay. But I guess for some investments, it's a little tricky, because you might wonder how the company is doing and so on. Whereas with GameStop, it's for me quite easy, considering that they are pretty much debt-free and have a decent war chest, so a decent amount of cash on hand. So which even in the current uncertain situation, yeah, should give them enough wiggle room to adapt and change if needed, to basically make sure they, wrong button, make sure they prosper over time. So obviously nobody knows for sure, and nobody knows what the future holds, but that's just my 2 cents about GameStop. So just a second. Yeah. Okay, so that's just my 2 cents about GameStop. With that, we move on. For Barnes & Noble Education Inc., we set our, so we still have the same issue. Someday I will figure it out. I'm currently making little progress with dealing with support with Motive Wave. It's not their fault. It's I just didn't find the time to reply. To figure out why the chart is loading here but not there. Yeah, as we can see, so if we break 831, we have to evaluate our labeling, because then I have a structural problem then with seeing a 5-wave move here. We clearly have 5 waves up, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, 3-wave correction, and then a 5-wave move here. If we don't break 831, that would be perfectly fine, and we basically have a 3-wave move followed by the next 5-wave. But if we break 831, then we would have to consider that there is more downside possible. And even though we only hold a small position, we would then rather take the, I don't know, at this point, $80 loss than holding on forever. Yeah? And yeah, so that's about that. So yes, close this chart. Immersion should have by now potentially, or is now in the area where the correction could be finished. As said, I expect that we might get to see the 61.8 retracement before we get further upward movement. So we're still waiting, because we're still clueless about this entire mess here. But unless we break the the low that we had here at around 381, we're just gonna wait and see. Our position is not big enough that I'm willing to close out, especially since the bigger pattern would suggest that we have now a 3rd wave in progress. So even if I cannot make full sense of what's going on here, I'd rather wait this one out instead of cutting here early, just to then maybe see it go up and suddenly the pattern makes sense. Yeah. NEO reported earnings, and apparently earnings were good. We gapped up today. We're still not out of the woods here. Again, I believe, so from visually, it looked first as if we finished our retracement here, which was, I think, the 50% or 61.8% retracement. Then it looked like we bounced here at the 78.6. So I already called this one wrong twice. So for now, we're just gonna hold on. Overall, we have a nice pattern overlaying it. We assume that we're in the 5th wave right now, and in that 5th wave, we have 1, 2, 3, 4, 5. Should now have a correction and should now actually get stronger upwards movement over the next couple of months for a 3rd wave, with obviously more than 100% upside. We only would abandon our position if we break 363 to the bottom. But yeah, like while we have some nice movement here so far, considering that we already also had a nice spike here, and then potentially here, and then potentially here, the beginning of one. I'm not gonna call it yet. We're just gonna wait and see how it develops. But I'm still fairly confident in our labeling, or in the current labeling, at least to the point where we assume that we shouldn't go lower than 363 in this corrective move and actually work our way slowly up. With obviously Tesla tumbling and losing market share and so on, and sales declining for Tesla, maybe it's the time for NEO to shine. Obviously, other electric car manufacturers will profit from that decline, because if people are not buying Teslas, then they probably are gonna pick other EVs, yeah. And hopefully we can profit a little bit of that given enough time. Yeah, our position in green wave, we haven't looked at that in a very, very long time. We can see that development is not very, very nice. Yeah. That's even a weekly chart, so we can see that while we had a rally here in December, since then we actually made a new low. But our position is so small, so we have an astonishing, right now. Where do we see the total value? 1 second. $98 in the stock, so that either they eventually turn the business around or we just lose the $98. I don't see a point at getting out here anymore. Like, we could have maybe monitored this one better and gotten out somewhere along the way, but obviously now I feel like the small investment that we have there, either it eventually recovers or it just goes down with the ship. Just like it happened in the SunPower, where we basically had a $430 loss because they declared bankruptcy. And now it's obviously still on our books because we didn't close it out. We could theoretically sell it, although we don't get anything for it. So that's the whole point. So to just remove it from our history, but maybe we keep it there as a reminder to not hastily jump into some positions. What's Bitcoin doing? Bitcoin seems to have reached a new low here, so that's a little bit problematic because it would indicate that we have a 1, 2, 3, 4, 5 move here, which on one hand is good. So visually, on first glance, this makes this look like 1, 2, 3. I don't know where it, so 3, 4, 5. 5 might not have been finished yet, yeah. And as I said, on one hand, that's good. On the other hand, the problematic with that is that a corrective wave is always 3 waves, which means yeah, let's remove that and draw both of that. Oh, come on. Yeah, undo. Okay, let's try this again. So because I have the 0.4 here, yeah. So so on one hand, I said that's theoretically good because let's start like this. Okay, so 1 second. So 1, 2, 3, 4, 5. So if it is like this, I said it's theoretically good because after that 5th wave, we should get a wave B. Question is how high that wave B goes, but the bad news there is after that wave B, we should at least get a wave C. So it looks more and more likely that we're in a bigger correction here, that we're not just correcting those 5 waves here, but that we actually might be correcting a bigger move. Yeah, so maybe wave 5 actually finishes here. So maybe I have, I don't know, maybe no, 1, 2, 3, maybe 1, 2, 3. 1, 2, 3, 4, 5. Yeah, so it's tricky. I don't see it. I visually don't see it. So, but overall, considering this here, it's not as much a 3-wave move anymore. It could be obviously also 1, 2, 3, 4, 5 in some weird way. Till here, it would have been okay for that to be in some form A, B, and C. So with a strong C wave, but making a new low here just invalidates that idea. So yeah, like I don't want to jinx it and say it already, but I feel like if we see a rally up again, we will assume that it's a wave B, and we will work with a ideally trailing stop loss, so I take profit of some kind. Because then after this wave B, and the wave B doesn't even have to go that high, so so that after that wave B, we can basically, or during that wave B, we can basically get out of our position before we get a wave C further down. Remains to be seen how this behaves and how it will go, but yeah, definitely worth keeping an eye on. It also depends, or it also remains to be seen then how this will or would affect other crypto prices. We can see that in, for example, the XYO token, we now are approaching the 100% target line, which also slightly below that, we would have a territory where we would need to have a diagonal instead of an impulse. I feel like in terms of time relationship and so on, the whole thing here still checks out. I believe we're still due another wave up. The question is, when will it happen? So we'll have to, as always, wait and see. NVIDIA, yeah, like, ooh, tricky one, yeah. So what's the high here? 153, 152. In NVIDIA, we get the same problem. So on one hand, we could have, maybe that's 1, 2, 3, 4, 5, although it's super weird, yeah. Then we would potentially be retracing at least this move here that we have marked. No, that one we don't have marked, but then if we mark it like this, so but we already broke that 61.8 retracement here, so that's a little bit tricky. Also visually, it doesn't look like ABC, but we can see one down, up, down, up, down. So same situation, that it appears to be maybe some kind of 5-wave move. So yeah, looks like the market's in for some extra or additional turmoil and adjustments. Yeah, we'll have to keep an eye on it. I don't have a horse in this race. Our biggest position is and will stay for now GameStop. So it's like there's not much point. I don't have spare capital to profit off of any additional decline or analysis, so which makes it harder for me to get interested in actually bothering to label it, because I don't get anything out of it. If I'm right with my labeling, I don't make a profit because I don't have the spare funds right now, because again, our position is in GameStop. If I'm wrong, I just share wrong analysis, so it also doesn't help anyone. SMCI would interest me if we get a chart to load, so, but that's pretty much then it, I guess. So if we get a chart, if not, I'm also not mad. I said I believe SMCI should trade at below $10, most likely around $5, but it's a long way to there. So, yeah, no, we don't get a chart. Do we get a chart for Tesla? Yes, 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 yes. That one's tricky, but visually, this here is a three wave move followed by another three wave move. So where we now are following a steep decline. And I would not be surprised if we lose another, what's that, 80%. I mean, we relatively clearly have, even on the monthly chart, 1, 2, 3 might be here with a flat correction till here or till here. So 4 and then a wave 5. So, and we're now correcting this entire history for the last 15 years. So, and where it looks to be a flat correction, so we have a move down and move up, and now should get our move down into this area here, which is at least another 50% drop. And the most likely candidate would actually be the 38.2 retracement if we trust the wave C target area. On the other hand, the most likely candidate would, however, be the area here between the 61.8 and 50% retracement. So the area of wave 4 of the previous impulse wave. Obviously, we're looking at a monthly chart, so we're talking about a couple of years for this to drag out, to basically get Tesla down there. I mean, considering the sales numbers and whatnot, and their actual market share and how much they are overvalued compared to other, like for example, Toyota or so, I can imagine that. I'm actually surprised, like back then here in 22, I already expected this to be the beginning. I did not expect this whole thing, and I thought this would be the wave down, A, B, C, and then we get another wave down. But I turned out to be not wrong, but too early here, and too early by pretty much 2 years or a little bit more. And yeah, it's going to be interesting to watch, but as I said, no horse in the race, so and therefore it doesn't matter too much to me, since if I'm wrong, I share. So if I'm wrong, I might cause more harm than good. And if I'm right, I don't get anything for it. So for us, pretty much GameStop is what counts the most. Anyway, I'm going to call it a day here, so I get some other things done as well today. I hope you were able to get something away from the stream. As always, don't forget, like, subscribe, enable notifications. And if you haven't already, check out the Elliott Wave Principle. Yeah, see you then all tomorrow with another episode of Daily Market Mastery. Till then, bye-bye.